What's going on, everyone? It's Wednesday, September 2nd. Let's get right into it. So, we last spoke on the 23rd, I believe, and I was looking for a move down to about 10.5, 10.6 area. We didn't get all the way down, but you could see in the following days we did end up heading down to about 11.1 or so before quickly, testing 12,000 and then very quickly getting rejected early today, late last night. So let's speak about what this looks like right now. There's basically two main ideas I have on this current price action here in the daily. So first of all, I want to start off by saying that it does look somewhat like a head and shoulder situation for me here. So really, there you have your left shoulder, you have your head, and you have a right shoulder. We did get two tests in this left area here. So I don't, we could possibly get a second test here on the right side as well at about 12,000 or so, but it doesn't look like that just yet. And when we get down to the 4 hour, we'll see why. But as of right now, we did break down towards the 11.1 region. This head and shoulders, for those who don't know, this basically is a psychological pattern, showing that price action was able to, create a high, and let's just call it 12,000 here. We were able to create a higher high, get to 12,500, but the high following that is unable to swing past our second high here. So, and matter of fact, in this specific case, we actually were unable to get past this left shoulder as well. So this does look like there's plenty of sellers lined up at this area, ready with orders to go ahead and bring price back down. And that does end up forming this range that we'll speak about afterwards. But just for now, if this is a head and shoulders like we're looking at it, to speak about a measured move, the way that you would measure this out is you basically take the baseline, which is right here at around 11.1 or so, measure up to the top of the head, and then you can actually take this line and measure from the breakout, so really right around 11.1 or so here, and you can see how far we can possibly get to. So measuring it out this way does show pretty much like a almost an exact drop down to, if I go ahead and move it over here, almost an exact drop down to the top of our B zone here. And it also does somewhat, not just yet. You might have a couple more days of price action here, but it does line up with this 200 EMA as well, which is right around 9,600 today, which is also where our CME gap is. So if this were to play out as a head and shoulders right at the top of our current trend, which is really where head and shoulders form, is really at the top of trends. Not to say that this is the top of the long-term or even medium-term trend at all, but maybe a short-term trend. We've reached maybe a bit of an apex so far. So if we do end up breaking down out of this, and really the only way to confirm these head and shoulder patterns is once we break this neckline here, or the baseline here at 11.1 or so. And really, to me, it'd be a 4 hour close that would show us a pretty solid, give us a pretty solid reason as to assume that we're going to break down from that point. You can see currently our 4 hour, earlier today, we weren't able to get below this 4 hour zone here from last week. So currently, we are looking okay. I do want to mention, though, we are currently below or maybe slightly above our 200 EMA here. We did get our first open below our 200 though in some time, and we only have about an hour left in this candle, and it's not looking too strong. It's looking okay, but not looking too strong just yet. So if price action isn't picked up within within the next 4 hour candle, which will also be the end of the daily candle,
then I can see, maybe more downside a little bit sooner than expected for Bitcoin. Excuse me. But if we don't break down right away, we have this 4-hour cluster of moving averages right here, really right around the 10.6, I'm sorry, 11.6 region. So if we do end up closing above this 200 EMA, I could see us testing this 11.6 area. And that's really going to be a decisive point right there for myself. And I'm sure a lot of other people who might be looking at this, like a head and shoulders, or even just seeing this as a major rejection point. And they might even, maybe be comparing it to our previous previous consolidation here, which I do want to mention is playing out, sort of similarly to where we are today. So just to take a quick look at it, you could see currently, last week, what really happened in price action was we were being supported by our 100 EMA, that is the green EMA there. And at some point, we end up getting a bit shaky around this area, and we break down to our 200 simple and EMA there. Similarly, you could see that this happened pretty much here, where initially, we were being supported by the 100, by the 200 EMA, but at some point we'd come down below our 200 simple, and eventually we get back above and use it as support, which is pretty much what we did here over this last week or so. I want to point out one major difference between the two, though. You could see that last time we came and used, we came below and used, the major moving averages as support. We ended up creating a new high right at that point. Whereas, today or last week or so in price action, we ride up our moving average cluster, but we didn't end up making a higher high, or really even come close to a higher high at that point. You can see we stopped right around 12,000, 12,050 or so, which actually isn't even above our left shoulder, left shoulder or shoulders here. So that to me is a major indication as far as strength, in this current consolidation compared to our previous consolidation. I mean, one of the immediate things that most people notice is that this previous consolidation was, I believe, about 3 months or so. We came in May, and we really exited towards the end of July. So about 3 months, we spent in this previous consolidation. And you can see so far we spent about a month in our current consolidation from, end of July, early August to September today. And you can see that the fact that we're already getting rejected from this area as opposed to making a new high here tells me that there aren't as many buyers, in a similar situation as there were in this time here. So that gives me a little bit less confidence, as far as Bitcoin playing out a similar type of consolidation here today. Basically, what happened last time was, we ended up consolidating sideways for long enough that we didn't have to go down and test lower prices, which I know that a lot of people are expecting or hoping for in this current consolidation here. Basically that we just continue going sideways in this region. But I don't think that that's likely. I don't think that we're likely to have two of the same types of consolidations, really form right after one another. I believe that this is going to be more of a retest consolidation here. So, really what would decide that is if we get a 4-hour close below this point here, which is really, somewhere around 11,100, around this base point here. And really quickly, just to break it down to a really low level time frame here, we could see that, once we started closing candles below our 21 EMA here, which is the green blue line here. Once we started, or teal line, once we started closing below that EMA, we ended up using it as major, major resistance over and over again until we had this major big sell-off here. Currently, we are creeping back above it, which is why I am somewhat expecting a move up towards the 11.6 area. But it's really once we get to that point and see follow-up price action from there that maybe we have an idea of what's to come next. So as far as the other idea or pattern that I'm seeing in this small zone so far, it really looks like a sideways consolidation or horizontal consolidation um, so far. And I say so far just because I don't think we have enough information yet on the chart to to really speak about this being definite just yet, but it does look pretty close. So really what we have in a sideways consolidation like this, or a parallel channel, whatever you want to call it, is basically when you have consistent levels, horizontal levels that price is getting either supported or rejected on. And you can see here at the 12,000 level that we've been rejected multiple times. We had this bit of a failure to exit the channel. And you can see when we came back down after that failure that we still ended up being supported by this 11.1 area, forming this sideways or parallel channel here. So what does this parallel channel tell us? Typically, when you have a parallel channel after a bullish upswing, or a bullish trend so far that we're in, you typically will end up exiting the parallel channel in the same way that you started it. So, we came in out of a bullish trend. Typically, you exit out of in a bullish manner as well. The only thing again that's thrown me off is that we haven't made a new high from this point, or even gotten above this area here. And the other thing about parallel channels is as you come and test these horizontal areas more and more so, each time you test them, they become easier to break. And that goes for both sides. So if we come up to test 12,000 again, I can see price action pretty much breaking up past that point, maybe to 12,500 or so, and we see what happens there. But and same thing really goes for the bottom as well. If we continue to test 11,100 over and over again, it will get easier to break. Simple explanation for that, for those who might not know, is basically each time price reaches a point, there's typically less people willing to take a position on that point. So as we come to test 12,000 over and over, there's typically going to be less sellers on that side of the trend. The reason for that, again, really simply put, is if we've tested 12,000, multiple times, people are less likely to sell that point because we've tested it multiple times. So it's really as simple as that. Typically when people want to get into positions, they want to see price escape the price point that they entered. But if you see that over and over again over the course of a month or weeks or whatever time frame you're on, that a price level keeps getting tested over and over again, you're just less likely to take a position on that level. Again, like I said, same thing goes for the bottom. So as we hit 11,100 over and over, we have less buyers in this region, and at some point, sellers will overtake those buyers and push price down. Similarly to the upside. So if we do end up playing out this parallel channel, to the upside, the way that you would take that measured move, basically from the breakout of our previous area here. So I would measure it from this point where I believe that there was a shift in psychology here. And you can measure that to the top of your parallel channel. And then you can actually take this to, either which way. So we can take it to the upside for a target around, around 15,000 or so, or we can take it to the downside for a target around 8,300 or so. So both of these definitely sound like, or I'm sure they sound like, a bit extreme right now. But typically that is how these patterns will play out. And me personally, I do wanna let everyone know I am more or less expecting a move to the downside, prepared for upside movement as well, and upside movement is just easier for really for everyone, and that's why typically I think that it's that doesn't happen, um, like most people want it to, simply for that reason that it's easier to trade something that is just moving towards the upside, whereas it's a bit more difficult to trade something that will have 20% dumps, uh, or 20 plus percent dumps, over the course of its trend. Uh, if we did end up playing out this move to the downside down to about 8,300 or so, I mean currently that would line up pretty perfectly with the bottom of my A zone here. It's really once we start getting below this region that I start to get a bit worried. I had called it a nail in the coffin, I believe, in the last video. Should have been a bit more clear about that because a few people did message me about that. Uh, Really, what I mean is if we can see a 4 hour, and definitely a daily, but most likely a 4 hour will tell you as well. If we start to close 4 hour candles below, I would even say below 9,000. That's where I would start to get a bit more cautious with my trades. Um, but it really is waiting until those closes that will be extremely significant. And the reason I say that is, for like an easy example to point to is something like this, where price action does swing down to about 8,100, but you can see that we end up closing above the 21 here at about 8,500 or so, and that actually launches us up, to almost 10,000. So it's really closes that we're looking for as far as breaking down. Again, as far as breaking down, if we take a quick look at the weekly, which is starting to look a bit more like, like a short-term top here. Um, the end of this A zone here, the bottom of this A zone, as far as well as the measured move out of the, you know, kind of like a flag or so that's forming so far. Also does happen to line up with the 100 EMA here around 8,100. So as the weeks go by, this can possibly come up to about 83, 8,400, and that is pretty much the price range that I'm looking at right now, as far as if we break down towards the downside. And let me just show targets again for the upside. So if we were, for instance, to take this towards the upside, you can see that it pretty much lines up with this point here, which was our really our weekly close, on the way up to our all-time highs. I wouldn't say it's too significant, besides the fact that we had a major rejection, really at this point here, second week of January, and it's really that 5,000, 15,000 area, just generally speaking, that could cause a bit of hesitation there. But I do believe that if we are to get up to this 15,000 area, that we're most likely probably going to hit 16 before we see major retrace or a bit of a, maybe even a reversal. I'm not sure, but really that's as far as the two major targets go. I do want to quickly break it down on the 4 hour as well. So on the 4 hour, we can see that we have, we had our candle close below the 200 EMA here. Our current candle opened below, and currently looks like it's attempting to close above. I believe that this is going to be definitely a significant close here. I mean, I believe the next candle will be telling as well, considering it is the daily close as well. But so far, it's not looking the best. It does look like it wants to continue down and test this 10.5 area, where I do believe that we'll have a really decent bounce from that point, probably back up to about 11.1 or so. But if we do end up closing above, I could see us testing 11.6, 11.6, 11.7 area, and possibly even making making it up to 12,000. But really what I'd be looking for if we're looking for downside price action is price to get stopped around 11.6 and continue down towards 10.5 or so. Same thing goes for the opposite side. If we're able to make it up to 10.6, what I want to see is 4-hour closes above that area, and then we're pretty much likely to hit up 12,000 or so, and we could see where we go from there. So last time we had wrapped up the video speaking about daily RSI, getting to those single digits, and just to show that really quickly, we are still really around the 40 area. I believe last time we spoke we were around 44 or so. So still really around that 40 area, not near those single digits that we're really looking for as far as a major, significant bottom. But today I want to wrap up speaking about the weekly RSI, which to me is a lot more clear, as far as when Bitcoin is ready to enter a bull cycle and when it's not. So again, we're going to look at the previous cycle, and really, I feel it's pretty clear to see here. Again, with our consolidation before our bull run begins, you could see what happens in this consolidation. Bitcoin is pretty much staying above the really staying above the 49, maybe 50 region. And you can see that once we come down, for our final retest of that $464 region, 1st of August, you can see that that brings RSI again down to about a 46 read. And you can see here currently today in our consolidation, we consolidated around a 50 read, maybe a 52 read during this symmetrical triangle, around mid 9,000 or mid low 9,000 area. And then here, currently we're pretty much sitting above 65 or so, right around the bullish control zone or the high zone here, whatever you call it. But what we're really looking for is, or at least what I'm looking for, is a move back down towards that 50 region, and that would give me, a bit of a sign that we've retested this area, this consolidation area, because I do believe that Bitcoin is looking to retest this area, similar to how we retested this area, this breakout area here. And then one more thing, as far as that 44, 47 area here, in our previous trend, you could see that pretty much throughout the entirety of the trend, if you want to just, we could even start it from this point forward here. You could see pretty much throughout the entirety of the trend until, mid-December where we hit our all-time highs. Bitcoin pretty much stayed above this 45 level, besides this one short exit here where we put in a 41 read, but you can see that pretty much the entirety of the trend we stay above this mid 40 level, and then as soon as we start breaking down, you can see that this mid 40 level, or really 50 level, ends up becoming pretty much becoming resistance in the RSI. So, the entire bull cycle, we use this mid-40s area as support on the RSI. And then into the bear cycle, we end up using that mid-40s, 50s area as basically as a resistance, right, as a sell point. And you can see something similar happening here today. We've worked our way back up to the bullish area. And I believe what we're looking to do is retest this, 48, 49 area and use it as support on the RSI here. And maybe, if we do that, we have a similar, similar few. I mean, in this case, it was about a year or so, similar to a year or two of positive price action, of a major. Really of a major bull cycle. So really, that about wraps it up. What I'm looking for again is this RSI to come down and show support around this center line here, and we can actually extend this out just a bit further to see what it would look like. Excuse me. I don't think that we'll use maybe the same exact level here. What I think is more likely is that we end up using the low of the consolidation. So similar to how the low of the consolidation here was around 47, 48 or so. Um, the low of our previous consolidation was around 50, 51 or so. So, really if we come down to that 51 read, and we could see, some positive price action from that point, some support coming in. That's really what I'd be looking for to, 100% show me that we're ready to create a bull cycle here. Hopefully for the next, at least 2 or 3 years. I believe that Bitcoin is in expanding, cycles. So I do believe that this cycle will be longer than our previous cycle. Not that it will, generate higher gains or anything or higher returns, but um, I believe that getting up to our next high will be a bit longer of a process than our previous cycle. So that just about wraps it up. Let's see what happens as price comes down or as RSI comes down to that 50 region, and we'll go from there. Thank you so much for watching. You guys have a good rest of your day.